if you believe at all in the housing market in the United States with rates being cut, you should definitely be looking at Lowe's, at least in the terms of housing with home building. That should start picking up again pretty soon. Lowe's is primed to benefit for that, along with Home Depot. I've done a video on Home Depot as well. I own both of these stocks. They're both relatively safe. Their market caps are over 100 billion, significantly over 100 billion. I believe Home Depot's is roughly around 400 billion. I could be off pretty dramatically there, but these are not small companies by any metric. And they're primed, they're great position to benefit from rates being cut. Now, we don't know exactly how dramatically they will be. Inflation was a tick higher than we thought this month, but most of the signs point to rates continuing to be cut over the next year. So that brings us to Lowe's. Over the last 5 years, they've performed better than the S&P 500 while having a dividend at least in the relative range of that as well. And over the last 10 years, they've done about 5x roughly, which is also significantly better than the S&P 500 during that time period. Now, past indicator isn't guaranteed of future performance, but most companies that are most likely to outperform the S&P 500 are ones that already have, assuming they aren't at ridiculous multiples and PE and similar things. Lowe's PE is significantly, what's the word I'm looking for? Significantly cheap compared to that of Home Depot's. Home Depot is sitting around over 30. So you're getting it at roughly 33% the price of Home Depot. However, Home Depot historically has done a little bit better than Lowe's. And their forward PE is a little bit generous as well, at least in terms that it's lower than the PE. But if we look at the forward predictions, that's just because quarter threes may be projected slightly lower. But this, especially towards the end of it, could really pick up if rates continue to drop and home building accelerates faster than we think. I'm not quite sure if this is analyst projections or the company's projections. Some of you may know that analysts will create a price target on most things, not even necessarily just earnings per share, but revenue and even amount of things sold in the case of companies like Tesla. But assuming this, it doesn't really matter if it's the analyst or the company's projections, because that's where they're at, and that determines, PE and all that, forward PE. But if we look at that, honestly, even if it does, hit forward PE of 23, it doesn't really matter, assuming guidance is good. If we start looking towards a home building cycle that is higher, right, that looks optimistic, people start building, Lowe's is going to benefit from that before even the money starts coming in. When we say, hey, we're looking at that, it's going to jump up. It's jumped up significantly over the last year with the more optimism about rates being cut. And it's just probably going to continue to go up if they have even decent guidance towards the middle or end of next year. So, like I said, clearly this is not at the low. Actually, we're near all-time highs, if not at all-time highs. Yes, we are at all-time highs. But the company really isn't that expensive right now at all, really. Certainly when you compare to Home Depot, and certainly if you factor in, that all the hype and all the earnings haven't come in yet. I don't think this is an overvalued stock. I will cover all different types of stocks, overvalued, undervalued. This leans towards the undervalued. And if I didn't already have a significant amount of my portfolio in Lowe's, I would be eyeing this stock. Schwab agrees with me. This is their 1 year performance of the share price, does not include dividends, for my understanding at least. They think it'll be in the top 11% of all stocks performing in the next year that they rate, which is most stocks. Certainly those over 5 to 10 billion. Many others, there's some mostly leaning towards buying. ESG score, environmental. I try to brush against this. I don't really care. Environmental generally, people who are really big into environment see it as a plus, and people that don't really care see it as a neutral. So I don't mind going to that. But I do know some of the stuff involving ESG has some political controversy around it. I wish I could address it all and dive into it more, but people just get upset with that sort of thing, and it's just not really worth diving into the super deep into it. So like I said, if you don't know, Lowe's mainly does home building stuff, home retailer. You all know that. Home Depot does a little bit more with contractors, but Lowe's is no slouch in the game either. They provide a lot of stuff. Let's look a little bit at the earnings quarter by quarter, just briefly. Yeah, I mean, you can see the trend quarter four when it's cold, especially in northern states. There's very few building being done, so it does create a rather goofy looking graph, and it's been stagnant since, mostly after COVID, with rates being high, basically since rates were hiked in 2022. It's been mostly stagnant, but it hasn't declined even when the market hasn't been well. So you know that when things start going good, start going bullish, people start building, it is very likely to shoot up. It just is. Actually, their best quarter, at least in this, for revenue, appears to be quarter 2, 2023, and quarter 2 of 2024. Actually, their earnings per share, yeah, that's been the trend. If you've been paying attention, is revenue has been meh, but they've actually been, excuse me again, they've been beating margin, and they've been beating earnings per share fairly significantly. So it just shows you that they're being efficient with what they have. I don't know. This is not investment advice. I almost just clicked on accounts. That would have been bad. I would not want that. I just searched again. This is not investment advice, but Lowe's would be one of my top picks personally. I know it's run up a lot. If I had no money and you just liquidated everything I had right now, Lowe's would be at the top of what I'm buying, just because I believe that home building, it's just going to exist in the United States. It's always going to be important. And even if homes weren't being built extraordinarily a lot, you still have to replace everything in all the homes. But with immigration in the United States, I don't really see a lack of housing. This isn't China or Japan with the population crisis, or South Korea for that matter. So I don't really see a real estate market being sour in the United States for decades, right? This sort of thing doesn't happen. So I like Lowe's a lot. I like their dividend. I like the price. I feel like it's fairly cheap. I mean, if you get hit with a surprise recession, it'll go down, but everything will, right? I don't see any particular risks there. If you don't think rates are going to fall, if inflation shoots back up for whatever reason, right, unexpectedly, yeah, the stock will do bad. But I'm assuming if you look up and down your portfolio, you will be expecting losses most of those. I don't know how many of you are 50% in Procter & Gamble, right? So no offense if you are, but I'd assume most of you aren't. So I like Lowe's. I like it a lot. It's one of my top stocks. Do more research into it, of course, but I guess we'll look briefly at analysts here. A decent amount are saying hold, but majority are saying buy, at least over 50%. Near analyst price targets, but again, we are near all-time highs, consistently beat earning per share estimates, maybe a little bit off on revenue. But anyways, that's all I have for this video, guys. I appreciate all you watching. I appreciate you checking out the channel. I would appreciate if you made it this far, if you left a like or something similar, a comment maybe. It helps out the algorithm substantially for me. But anyways, I appreciate all you watching, and I'll hope to catch all of you next time. See you later.